Hi, you're watching Investor Insights, and in this video I'd like to talk about debt crisis, or I should say debt crises. I'm sure most of you have heard about the European debt crisis, how Greece can't afford to pay its debt because interest is too high, the yields have gone to 39% or thereabouts. Big negotiations, investors had to take a 50% haircut. Whatever it was, it's not good. Now, a debt or a government bond is basically an IOU to the investor. So when the IOU cannot be paid back because the rate is too high or the borrower just can't sustain the repayments, the results are catastrophic, both to the issuer, the borrower, and the lender or the investor. So what happened in Europe, as I've mentioned before in other videos, is that rates skyrocketed, and countries like Greece, Spain, Italy were struggling with all the debt that they're carrying, and their ability to repay the debt, or just the interest on the debt, was becoming more and more a fantasy. So steps were taken. I should actually say not steps, but just a whole lot of hot air came out of Mario Draghi, and that calmed things down. That made investors comfortable with holding all this junk debt from all those debt-laden countries, and in fact not just holding on to them but buying more. So as demand increases, price rises, and therefore yields fall. So now those countries are laden with more debt at lower rates than during the crisis, so everybody's happy. Just wait till inflation hits and they have to raise rates. And then you're going to hit the same thing all over again, except this time they've taken on more debt, and this crisis is going to explode. Now, America is actually in much worse shape than all of Europe put together. The reason being because it has more debt than all of those countries put together. And that's a scary thought, because America is the largest economy on the planet, although the economy is false because it's based on debt-financed consumption, but that's another story in itself. The debt issue with America is that all these quantitative easing measures to fix rates is going to stimulate a lot of inflation. And what happened in Europe is not quite starting to happen yet in America, but it's just little signs are appearing within the system that rates can't be fixed for too much longer. And if they do, they have to print a whole lot of money to do it. The whole thought process, the mentality of the bond investor in purchasing government debt in the first place is questionable, because the whole definition of an investment is the acquisition of an asset that, given enough time, will give you a better rate of return than inflation, either through income or capital gains. And when you're in the American bond market, in government treasuries, you've basically violated every basis. You've violated the whole principle of investing altogether, because you are not going to get a better rate of return than inflation, especially when inflation is now beginning to run wild. You've got US debt 3 months ago below 2%. The 10-year Treasury was below 2%. Now it's about 2.7%. Inflation is stated as being 0.7% annualized. And believe me, I don't know what methodology they used to work out inflation, but 0.7%, don't believe it. If inflation is stated as its truer number, which is closer to 5 or even 10%, then in terms of real returns, you're not getting anything. In fact, you're losing up to 8% a year. Now, you know that you're buying bonds on the speculation that the Fed's going to buy it back off you. So technically, you're not an investor, you're a speculator. So let's get that out of the way. Now, what's going to happen when the debt crisis hits due to inflation running, probably because of inflation running, and the government has to either do the right thing and stop QE in order to tame inflation, or they just keep on printing to infinity to try and fix rates further down. I don't even have a word for that apart from insane. But it looks like it's heading that way. And the debt crisis that is just going to happen, because regardless of how much printing that they do and how far this runs, inflation, once it hits, will be uncontrollable. Now, what happens when this implosion occurs? Well, first things first, America either does one of two things. It either says, screw you, we can't pay you back, tough, and they default. And that basically leads to a currency crisis, because debt is basically an IOU in US dollars. So you're going to have the US dollar drop like a sack of potatoes. It could lose 70-80% of its value. You can't say it won't happen, because it's happened before in the 70s. Or the Fed just decides to print to infinity and basically repay all its lenders with basically money that has no value. There's plenty of paper, but it has no value. So that's what we would refer to as inflationary default. Imagine holding on to a piece of paper, an IOU, for a long time, and basically every time you expect it to be paid back for it, they give you another piece of paper as the interest on that first piece of paper. And this goes on until you're sick and tired of it, you actually need money, and the person turns to you and says, you know what, here it is, here's your money, but that money's worthless. This is what the Chinese, Japanese, and other major US bondholders are facing in the not too distant future.